Chaos is coming. Hey, everybody, you're watching Bull Boom Bear Bust. Back with another dose of economic reality. I've got my blue blockers on today. Let's go ahead and get right into it. 2024, in my opinion, is going to go down in history as one of the wildest years in the last 100 years, maybe more than 100 years. So I've said here on this channel, I think that 2020 and what happened globally was just a warm up for what we're going to see in 2024. Let's go ahead and start right here on the financial side of things here. Kevin O'Leary says a coming real estate collapse will lead to chaos. Here's what you need to know. Basically, to sum it up, Kevin Leary says that this collapse will start in commercial real estate. And we're already seeing massive underwater loans at these banks. And we know the banks are freaking out. They're not going to come out there and say, hey, we're freaking out. They're not going to say that. But when you look at what they're doing, the banks are freaking out. I mean, they're actually considering suing the central bank for wanting to impose capital rules. We talked about that just a few reports ago. Let's just touch on that real quick here, because sometimes I say things and people think, no, that's not true. This guy's exaggerating. Let me bring up the source for this article here. Big banks mow the unthinkable, suing the Fed. In other words, banks want to be able to loan out money without having any money in deposits or any money in reserves. And if that continues to be the case, then you're not going to get very much return for your deposit, because if they don't need it, then why would they pay you very much for your deposit? In other words, if you see a 5% rate right now for depositing your money, that's actually pretty good. But imagine how much higher it would be if banks had to have actually the money in their deposits and reserves before they loan it out. Right now, it's a fractional system where they can have $1 but loan out 100,000. And basically, it's unlimited because the reserve amount right now is zilch, zero, right? So this would be a massive change. And of course, the banks, they don't want that because they know they've got so many loans out there compared to how much they actually have in deposits. And to top it off, a lot of people starting in March of 2023 with the bank failures, a lot of people went ahead and started pulling their money out of the banks. We saw deposits rapidly decline, and we saw a string of bank failures. Some of them were rescued, other banks were bought out, and you know how the story ended up here. But 2024 could be a massive year and a continuation of the collapse slash crisis that we saw in 2023. Just beginning in 2023, I should say. And it's not just me saying that. Of course, we've got people out there like Kevin O'Leary saying it's going to start in the commercial real estate sector. Now, when you get into this article here, of course, he's from Shark Tank. I think many of you probably know Kevin O'Leary, a very popular show. This unique situation, while appearing on a recent episode of Kudlow, he said, the shift away from in-person work will lead to more bank failures. Although many large-scale companies are shifting back on in-office work, many small businesses are not making this return. This means that many office buildings will remain vacant. So that's just one of the many factors. Also, a lot of these loans were given out at rock bottom interest rates. Now that rates are higher, banks that are looking to sell off these loans and get rid of this debt, they're having a much more difficult time. You always have the buyer and lender of last resort, aka the central bank. But we see what's going on with the central bank right now. They're actually might even be sued by these same banks that depend on the Federal Reserve or the central bank for life support, right? So crazy things happening right now that many people just don't even realize that these things are even going on. So therefore, they're not bracing for anything bad to happen. So we're going to be ahead of the curve here. And I'm not saying it's definitely going to happen, but if you look at the risks, and that's what a lot of this is, it's weighing the risks. Right? So let's say you're playing a card game and you got dealt three of a kind. Pretty good hand, three of a kind. But what if somebody has a four of a kind? What if somebody has a royal flush? And I'm not an expert at cards, but I think I got it right with those two hands that I mentioned beat three of a kind. Do you want to go all in on the bet, right? So a lot of it's just weighing your bets, weighing the risk. And I've always said here that I'm not all out. I'm not all in. I happen to be invested in some stocks right now. And would I go all in right now in stocks? No way, even though the markets have been going up. Actually, the past few days, we've seen some more weakness with the appearance of a double top. in the S&P 500. We're going to talk about that here in just a few minutes. But in other words, to sum it up, balance out your portfolio, be diversified, have some hard assets, aka precious metals, in case what hits the fan and we see this big meltdown in 2024. And again, I think 2020 was just a warm up, and draw out of that what you will, draw your own conclusions. But what happened in 2020, I think a lot more of the same or even worse will happen. Look for attacks on the grid. Look for banks going dark, getting taken over, or getting taken down by external forces, possibly, and hostile nations. And there's a lot of nations hostile to the United States right now, especially with all the global conflicts that we're engaging in now as a country. And I said it was going to be much more than financial. We're now actually doing strikes in other nations. Now we're actively engaged in these conflicts, in these wars, more than just financially. And it's going to escalate. It's going to continue to get worse. And I think we're going to see a lot of turmoil here unfold in 2024. Not to scare anybody, not to be doom and gloom. If you want me to be honest, I mean, I'm being honest. This is what I think is going to happen. So there seems to be some people out there that are offended at what I'm saying, or they're, every episode I see the same, a few of the same, not many, a few of the same comments. He's doom and gloom. Folks, if you want to think this is doom and gloom, then great, don't prepare. Don't expect anything bad to happen. But, all you have to do is look back a few years ago and see what happened. And you can imagine, the possibilities of what might go down here in 2024. And it's not just me saying that. So go talk to Kevin Leary and ask Kevin Leary, why he's saying that, lead to chaos. Real estate collapse will lead to chaos. So again, a lot of the things I talk about here, it's not just me saying these things. I mean, Kevin O'Leary is a very well-known person. All right. So let's get into some other news here real quick. Top Fed official says the inflation fight seems nearly won with rate cuts coming. Now, we've seen this back and forth, and sometimes it'll be one person at the bank and another person comes out and says the opposite, or they'll backpedal on what they said. So you kind of have to take all this with a grain of salt. Who knows what they're going to do? And even the bank themselves, we're talking about the central bank, they have came out and said they're going to be data dependent. So does it really matter so much about what they say today when they're going to be data dependent tomorrow, right? So what they say today could completely switch it up if new data comes out the very next day to support a different decision or a different outcome, right? But yet markets react to what these people are saying. Here's this person here out of the central bank again here saying that the inflation fight is won. Who here thinks the inflation fight is won? When you look at the consumer right now, the inflation fight is not won. It's only credit cards that are keeping the economy going right now. As soon as the credit card limits are dropped, look out, because the economy is going to go into a severe economic downturn. And you think the layoffs are bad now, just wait until the credit lines start getting dropped at these banks. And again, if the banks end up having to have capital in their deposits or in their vaults, so to speak, in order to loan out money, look out below, because it's going to be chaos overnight, just like Kevin Leary said. Of course, he was saying it for a different reason. He was saying that the real estate collapse, commercial real estate and property valuations and these loans, underwater loans, are going to be the trigger for it. But look at all the other risks out there. And all I'm saying is just be ready, have emergency goods and items, out of the system on your shelf at home, just in case we see a blackout / black swan type situation. Also have precious metals, have some items to barter with in case it comes down to that. And I know this may sound extreme to some people, but this is what I'm ready for. If you look at my garage, I've got shelves full of canned goods. I do have precious metals. I do plan to try to barter with people if the stores close up, if the system goes down here in 2024. So just a couple of things that I'm doing here. But let's go ahead and get into some other news here, some other information here real quick here. All right, let's talk about this article here. And this kind of underpins exactly what we've been talking about here. Market Watch. Why no recession so far? Credit the U.S. consumer. And I've always said this. The U.S. consumer is the backbone of the U.S. economy. If the U.S. consumer, a.k.a. the average person with a credit card, can go out and buy things with a credit card, even though they may not have any money in savings or very little money in savings, the economy will continue to look like it's growing. Yes, these people are getting further and further into debt, but this is how the game is played, folks. This is how they convince you that the economy is growing, just by letting people get so far into debt, very far into debt. And again, if the banks don't have to have money, they can keep loaning out money. They don't have to have uh, the limits on the credit cards dropped down, because there's really no risk if you don't have to have this, right? And even if a bank does fail, what have we seen? Have we actually seen the banks fail and go out of business? All the depositors lose their money, and then chaos ensues? No, we see the banks just getting emergency funds, emergency lending programs like the one we have going on for almost a year now, between the FDIC and the Treasury. And we see, programs like this that keep the entire system propped up. But in the background, we're seeing the cost of living go higher and higher and higher. So these things, these programs, and all these things they're doing to keep the system chugging along, these have consequences. And it's the cost of living that I don't think is going to come down unless something major changes, or unless we see, the big shock situation come up where the entire grid goes down, or the banking system, either one, right? So prepare for the worst, but hope for the best. Am I huddling up in a corner? And am I, with my hands over my head? And am I putting duct tape on the windows and, stacking up on self-defense units? Um, well, not that extreme yet, but I do say prepare for the worst. In the meantime, though, still look for investment opportunities. I happen to be involved in the markets still right now, because I know how much easy money can be thrown at these markets, especially in a year where we're going to have the selections in November. I wouldn't be surprised if we saw the markets go ahead and skyrocket, even on the back of all these risks out there right now. A lot of them that we've already talked about here in this video. So nothing would shock me at this point. Again, am I way out there? Am I off in the stratosphere somewhere? Or do you kind of see where I'm coming from? And maybe do you agree somewhat or even a lot about what I'm talking about here? If you do, please give us a comment down in the description of this video. It really helps the channel. And I read your comments. And I may not have time to reply to all of them. Sometimes I may click it and give it a thumbs up, or maybe give it a little heart if it's a really love felt comment, about my content or something else. But I do read your comments. I don't always have time to reply to them. Sometimes hardly any time. I'm actually on the road sometimes, reading your comments at the stoplight, which probably shouldn't be doing. There's laws against that, but I do use hands-free phone. All right, so I'm actually not breaking the law because it's hands-free. So at the light, I'll scroll through some of the comments, but yeah, don't have time to always reply to them. But thank you for the comments. And the reason I brought that up is because a lot of times I'll read your comments, and many of you have given me a lot of valuable information, news, links. You tell me something that's happening, and I go look it up, and I find out that it's true. I actually learn things about reading your comments, as well as all your supportive comments and everything else here. Well, let's go ahead and get into this here. There's some other information I wanted to discuss with you. This has to do, again, with the cost of living, the inflation, the U.S. consumer, which is the backbone, the driver of the U.S. economy, as that previous article pointed out. Thank the consumer for the economy not going into collapse right now. We have this here, insurance premiums exploding here out of CBS. Car insurance premiums around the U.S. are soaring. Here's why, and I'll just sum this article up for you without having to go line by line. Many different reasons. You have more accidents. You have the higher cost of repairs. One, because of the parts are very expensive in these newer cars with all this technology, all these sensors, backup camera, lane change sensors, when to brake, caution, like front sensors in the front of your car. I don't know all the technical names of these things. Bottom line is the electronics and all the sensors in these cars are very expensive. You can see one fender get banged up, and one dent costs $3,000-$4,000 because they end up having to replace all the entire fender with all the electronics and sensors, cameras, all these things. Even a mirror. There's a lot of these mirrors out in these newer cars out. They have these heated mirrors, or these defog side mirrors where they automatically defog. They have heated seats. So when a car gets totaled, you're talking about just a massive amount of cost. And a lot of times they'll just total the vehicle because now the parts are so expensive. We're seeing more total vehicles, more accidents, higher cost of parts and material, but also the cost of labor. Think about it. The higher the cost of living goes, the more pay is going to be demanded from everyone, even including body shop workers, people repairing vehicles, and that includes mechanics too for vehicle repairs. But when it comes to insurance premiums, look at the body shops. They have to pay more because the outrageous cost of living. Look what's happening here in California. We have fast food workers making a minimum of $20 an hour, and as a result, we see some fast food companies just getting rid of certain staff. Look at Pizza Hut in California, getting rid of their delivery drivers. Now they're just going to have to go with Uber Eats or one of these other food delivery services because they don't want to pay $20 an hour. We have medical workers out here going to be paid a minimum of $25 an hour, and of course that's California, not the other countries or the other countries, the other states. California's not a country yet. Maybe we'll be a country and go off into our own country because we're so different out here. But right now we're just a state. um, but what's happening in California is going to continue to spread. Look at what's happening just with housing prices. I mean, home prices in several different states right now that used to be cheap or affordable are right now where California was just 4 or 5 years ago. Look at Michigan. A good friend of mine, DJ Jojo, just sold a home up in Michigan, nearly $400,000. I say that name because that's a screen name here down in the comments here, DJ Jojo. Shout out to DJ Jojo. $400,000 for a home in Michigan just a few years ago. You could have bought a home in California for $400,000. Now it's very hard to find a home today for $400,000 in California because, well, maybe a fixer-upper, but bottom line is you're seeing the cost of other states, cost of living in those states, come up to be very similar to what it was in California just a few years ago. So all these people said California was too expensive. I'll never live there. Well, you're living there. If you just look at the financial aspect of it, a lot of people are already paying what Californians were paying just maybe 5 years ago. So I know it sounds crazy, but just look up the home prices and you'll see. And actually, right after the real estate collapse in 2008, 9, 10, 11, 12, when prices were still very, very low, you could have bought a home for $200,000. A 2-3 bedroom house. Condos were going for like 60, 70,000. Small one bedrooms in San Diego County, various locations. Now those same ones that were going for 60, 70, 80,000 are now 350,000. We're talking about a quadrupling, a tripling and a quadrupling of some of these home prices here in California just in the past 10 to 15 years. Pretty outrageous. Well, let's get into some other information here. There's quite a bit I wanted to cover with you here today. How high could insurance rates jump? Expect them to go a lot higher, folks. The cost of living, the cost of material, labor, when it comes to home rebuilds and home repairs, the cost of the materials is exploding because we're having so many more claims. Look at all the flooding that just happened up in Maine and several other states because of the storms across the East Coast. Look what happened in Hawaii. Look what continues to happen here in California with these severe weather incidents. So many homes being destroyed. And of course, insurance companies paying more for labor, people demanding higher wages because of the cost of living, more for materials, more claims, more severe weather. Get ready for everything to get worse and continue to skyrocket. If it doesn't happen, I'll come on here and I'll say I'm wrong. Here's another article. Remarkable surge in auto insurance cost, bans U.S. inflation. Right. So all these things, I just want everybody here to be aware of all the risks that are out there. It doesn't mean that you can't have fun. I had a very good time over the holidays. We had a big family get together. We watched football. We had awesome food and laughs and cheers. Cheers, stuff like that, right? So I'm not saying huddle in the corner and hide, but just be ready at the same time as having fun, enjoying life, not being scared. All right. So this is not to scare you. This is to prepare you, right? Nothing wrong with being prepared. I can always tell by looking at people and talking to people if they're prepared or not, right? If you're prepared, you're confident. You don't have a worrying type of attitude. You're always going to be ready for anything that's thrown at you, right? So that's what I want all of us here watching this today. I want all of us to be ready. I want all of us to be prepared. And nothing wrong with that, right? And you can actually profit when you see the markets plunge, when you see oil prices hit zero again like they did in 2020 because everything shut down, you're going to be ready to go in and buy some oil company stocks. I still hold ExxonMobil today, and it's been a huge return for me over the past few years. Probably one of the biggest returns I've ever had in my lifetime of investing. Uh, Holding a stock since 2020, I sold most of it off. I think I've sold about 70% of that particular position. But my point is, if you're in the right place at the right time, buying opportunities come up. I wouldn't be picking up pennies in front of a steamroller right now as far as investing in the markets. I'm in the markets, but a lot of those are stocks that I bought when prices were very, very cheap. I still hold some Carvana right now. Bought that one for under $5. I have to look at it. It's way up. I sold off over half of that. Took profits. Nothing wrong with taking profits, folks, especially if it means staying out of debt and paying off credit card balances, taking profits, nothing wrong with that. You may miss some upside, but you're never going to feel sick or regret too much about taking profits, unless it's something crazy like maybe you sold Bitcoin at $1,000 or something, and now it's 40 something thousand. That can be a very regretful situation. But otherwise, nothing wrong with taking profits. And if you do take profits, it doesn't mean you're selling everything. Maybe you're selling off half your position and you're holding the other half for more upside. But then if you don't have that other upside, if you do see a big correction because who knows what, some chaos being unleashed by, like Kevin Leary says, if we do see a correction and prices come down, you're not going to feel too bad because you already took some profits. And even if prices do come down, then after you take your profits, you might not even be losing money. You might have already still made money. So then no matter how far it drops after that, it doesn't matter as much. You know what I'm saying here, folks? So position yourselves. I just want us all to be prepared. I want to thank you all for being here. Thank everybody for coming back to this channel, for giving us the thumbs up and the like. Please subscribe if you're not already. This channel, we're not seeing growth like we used to see. So I think something was triggered in the algorithm, maybe something I said. That's another thing. You might know this, you might not. We live in an environment right now where there's so much sensitivity out there amongst people that if you say one word, sometimes that'll trigger this algorithm, and it'll put you in this category where they don't want you to be seen or heard being here. Bye for now, everybody. Peace.